The Federal Reserve is expected to keep interest rates on hold later today. It's Wednesday, 19th March, and here's what you need to know. Well, the US Central Bank is expected to keep its overnight benchmark interest rate unchanged in the 4.25% to 4.5% range. Now, policymakers are making this call amid falling stock markets and tightening credit and signs of slower spending by better-off households. Watch out also for the Fed's economic projections, because that should give us a good idea of how they feel President Trump's policies are impacting on the economy. Well, overnight, the Bank of Japan kept its interest rates on hold at 0.5%. That move was widely expected. Policymakers there decided to spend more time focusing on how US tariffs could impact on its export-driven economy. And don't forget, on Thursday, another central bank makes its interest rate call. The Bank of England is also expected to keep rates on hold at 4.5%. 500 billion euros, that's what Germany's new fund for infrastructure is worth. Parliament on Tuesday approved plans for some massive spending in an attempt to overcome 2 years of negative growth in Europe's largest economy. Perhaps more significant, though, was that politicians there also approved plans to ease its current strict borrowing rules. Our stock of the day is Nvidia. Its CEO, Jensen Huang, announced on Tuesday that its power-saving optical chip tech will have to wait for wider use. The chip giant saw its share price fall by over 3% as a result. Now, many investors see this kind of technology as key to building better AI systems. And our chart of the day is Morgan Stanley. Its share price has fallen by over 6% since the start of the year. And a source has told Reuters that it's planning on shedding 2,000 jobs. That's roughly between 2 to 3% of its total workforce. And it's not alone amongst American banks. Goldman Sachs says it's planning to trim staffing by between 3 to 5%. And earlier this month, Bank of America cut 150 roles. And that's what you need to know this morning.